Hey everyone, welcome back. Today I wanted to talk about how Tesla is going to miss on revenues in Q2 and will be driven by their automotive business line. However, this isn't what I actually care about in Q2. If you haven't been paying attention in the last 2 weeks, Tesla stock is up 35% on one main piece of news. That news is their most recent press release highlighting their deliveries and production numbers for Q2. They have what looks like an impressive Q2 at first glance, with deliveries coming in at 443,000. This is mostly Model 3 and Model Ys, which was 422,000 of the 443,000. Their production was also lower at 410,000, which is a good sign as well. This signals that they are selling through inventory, which is always good to see. So I would anticipate in their Q2 results to see a decrease in their inventory balance. But let's put some context to these numbers though. So maybe we can try to get a picture of the Q2 results before they are released on July 23rd and talk quickly about what I'm actually going to be keeping my eyes on during that call. So first, let's put these deliveries and production numbers into context to how Tesla has performed last year through the first 2 quarters compared to this year through the first 2 quarters. In Q1 of 2023, Tesla produced 440,000 vehicles and delivered 422,000. In the second quarter of 2023, they produced 479,000 vehicles and delivered 466,000 vehicles. This brought the first half of 2023 to roughly 920,000 vehicles produced and 889,000 vehicles delivered. Of the 889,000 delivered, 859,000 were Model 3 or Model Ys, which would be around 97% of all vehicles delivered. This is important as we want to understand if there is a shift in vehicles being sold, as it can impact the average sales price. This would be a mix shift. Now for 2024, let's jump into Q1. They produced 433,000 vehicles and delivered 386,000 vehicles. In the second quarter of 2024, they produced 410,000 vehicles and delivered 443,000. This brings the first half of 2024 to 844,000 vehicles produced and 831,000 vehicles delivered. Of the 831,000 vehicles delivered, 792,000 were Model 3 or Model Ys, which was roughly 95% of total vehicles. This is a marginal change in mix year over year, going from 97% to 95% being Model 3s or Model Ys. I would guess the shift is going to be driven by the Cybertruck, which was not being delivered in the prior year. This should have a positive impact on revenue if everything else was equal, as the Tesla Cybertruck has a higher price. So quickly, let's talk about the year-over-year results. In Q1, Tesla production was actually down 1.7%. However, in Q1, deliveries were down 8.5%. Q2 production is actually now down significantly at 14.3%, while deliveries are down 4.8%. It appears they've managed to cut the decline in roughly half from a year-over-year perspective on deliveries. So quickly, let's hit on where I think automotive revenues will land. In Q1, deliveries were down 8.5%, while revenue was down 13%. On an adjusted basis, Tesla revenue would only be down 8.5% if prices had stayed the same. But it appears that for each 1% decrease in sales, they actually experienced an additional 0.5% decrease from pricing. So a super quick extrapolation is that sales will be down in Q2 by 4.8% just from deliveries, then let's call it an additional 2.5% from pricing for a total 7.5% decrease in revenues year over year. So I anticipate automotive revenues will come in at $19.7 billion, as the previous year to Q2 revenue was $21.3 billion for their automotive business unit. This would bring the first half revenue to $37.1 billion for this year compared to $41.2 billion, or a 10% decrease year over year through the first half of this year. So I fully anticipate revenues to still be down year over year, albeit better than they were in Q1. The analyst average for Q2 revenue estimates is $24.2 billion. And if we take the $19.7 billion estimate we have and add roughly $3.8 billion for their other business units, we end up at $23.5 billion, which is a miss and a year-over-year decrease. But the main thing I want to see is margins. Are they going to continue to be around a 17.5% margin, or will revenue actually be slightly higher than I anticipate and margins will expand? I think if they can somehow get margins to expand back to around 19% as they were last year, the stock would go crazy. But if revenues ends up down and margins stay around 17.5% or worse, I think the stock will actually stay relatively flat through earnings and then slowly trend down over the coming quarter. I do fully expect Elon and the CFO to state they are seeing momentum in the business. which is true, as from Q1 to Q2, their sales in deliveries have picked up, and they're going to try to spin this as a positive story. But unless the margins expand, I still see this as a low margin auto manufacturer that's overpriced. I'm excited to actually see how Q2 lands, and we'll compare back to my quick analysis that I did here. Anyways, that's all I had. Just wanted to quickly extrapolate this out and share it with you all from their recent press release and see if we could make an accurate prediction at how Q2 will land. So thanks so much for watching. If you have any questions or comments, please leave them below.